Hello, this is the TradeSite U.S. Stocks and Futures Market Preview for the week beginning Sunday, June 5th, 2016, ending Friday, June 10th. Hope you had a great trading week. It was kind of a light week, to be honest. One of the worst we've seen in a while. Came in, we knew it was going to be light on Tuesday. Monday, we're closed for Memorial Day. Tuesday, we knew it would be light. First day back from a long weekend, but also the last day of the month, and it was. And then Wednesday, picked up, but not much. Thursday wasn't that impressive. Friday, just had a few winners here and there. Really kept the calls down. You don't want to overtrade a bad environment. I would say that was a pretty bad environment. But there's some inside baseball to talk about here on the markets, and this is a real important technical indicator and distinction we need to discuss here. This is on the ES front month futures contract. This is the S&P daily chart and futures form. And we've been following this 13 sell signal that we got back at the beginning of April. We ran up from after the signal and hit the risk line of the signal and failed, which is what you're supposed to do, and then rolled over and kind of double bottomed out. And if you really look, we've been in essentially a 50, 60 point range for about since the middle of March now on the ES. So it's really boring. It's a very narrow range compared to, you look at September, October, November. December was a little slow maybe, and then January, February. So this has just been, not the most exciting trading environment for the last 2 months. Really happy we can plug away most of these weeks, except this last week. I think it's taking its toll. But at any rate, the important thing about the signal is that for the signal to be broken, unless you head down and complete, like go down to that red line at the bottom, that would be one target. There's another way to complete it by making a target. If not, if you head back up, the way the signal was broken is if you get a close above the risk line, the pink line, and then take out the high of that day the next day. And in the futures, we just did that. We closed above it on Thursday. That's the white candle. And then you can see it looks like Friday's trading trade above that. And if I go to projection mode, which will let us count Friday's trading, you'll see the pink line that's dashed, which means it's done. You've killed the signal. The interesting thing about this and how the market does things that just are so interesting to me is we got that close on Thursday, and then we had the unemployment data on Friday and the NFP data, and it was horrible, and it caused a gap down in the market. So the only reason you actually see any trading above Thursday's high on Friday is because of the overnight session when nobody's trading. So if you actually go and look at the S&P cash index, which is pretty much the same, right? But this counts the actual market hours. We got the close Thursday right at the risk line, and we did not get above that. So if I go to projection mode here, signal is still in place, and we just got a new 9-bar startup. So that's so fascinating to me. The market can do these things. It almost feels rigged like that. Is it still in play, or have we broken it? Now, the obvious thing to look at is this. If we can just close a couple of points higher and get above the last couple of days high, well, then we're going to break the level either way, and the line's broken. And when that happens, we've got an inverted cup and head and shoulders here on the market, and a breakout to highs could really be a runner. But until that, I still say the signal's in place because I don't really like to count the overnight and pre-market futures trading. It's so thin, and really that's not what played out in the market. So I think the signal's in place still. Could still easily get broken, but right now I think it's not done yet. So at any rate, by the way, new 9-bar startup on the SP. All right, so let's look at whatever else we've got here. And that's an important distinction too, by the way. We completed a 9-bar startup on the cash index. So that's a sell signal in itself, not as big as the 13. So anyways, very, very interesting. It'll be interesting to see what this next week brings. Hopefully not just flat sideways. Crude oil down 55 cents to 48.62. Gold rose $33.30 on the unemployment news. NASDAQ 100 down 21.56. This is not really at new highs. Stocks up 2.17. And again, there's a nice inverted head and shoulders here, and it's just been ripping. This thing managed to be up even when the rest of the market was down on Friday. That's the result of a big pattern like this, which is why if the S&P does break out, the whole market's probably going to rock. Biotech's down 46, but that's just a blip. They're still set up a new high here over the last 2 months or so would really get things going, and as go banks and biotechs, so goes the market, is the expression. Here's the VIX. There's a risk line from the 13 buy signal at the end of March that we still haven't violated. Closed at 13.47. That was down a bit. A low VIX reading like this is not good for volatility, which is what we like to see as traders, so that's getting old. The trend closed at 1.24 with the 10-day at 1.17, so no signal there. NASDAQ volume on Friday, 1.56 billion shares, barely better than that on Thursday. 1.6 on Wednesday. Ironically, it was 1.9 on Tuesday, the last day of the month, so some end-of-month printing, but no real action that day. You'll see that in a moment. Advanced decline ratio on Friday on the NASDAQ was negative 806. That means 806 more stocks down than up. but on the New York it was positive 273. Google lost $8.41, which is pretty much a blip. Sorry, I should say Alphabet. Apple gained 20 cents. Amazon lost $2.70. Note we have a 13 sell signal in place on Amazon, and this has been a market leader. Netflix down $1.66. All right, let's look at the intraday action, and then we'll look at the data coming out this week. So we'll go to 10-minute candles so you can see the whole week. Keep in mind, this is also going to show you see last Friday off to the left, there's a half day in there for Monday. They opened the futures market for a couple minutes on Memorial Day because they have to. And so really from Friday to Tuesday, you get a small gap up, filled it very quickly. We were back in Friday's action range on Tuesday, middle of the day, and then sold off and came back up late in the day. Wednesday, gap down, shot up to fill it, and inched a little bit higher for the close. Thursday, gap down, shot up to fill it, came back up and filled to the price that we'd been at on Monday. And by the way, that's where we got the close. The risk line on the daily chart was at 2100, and getting the close at 2103.50 was what put us above that. So then again, this is my point. All you have to do now is trade above the high of Thursday on Friday, and you negate that risk line on the daily. Well, look what happens. If you look just at the market hours, we did not do that. We gapped down on Friday and never got there. So all that trading was in the pre-market stuff. Here's the NASDAQ side, a little even flatter, really. I mean, this is not a very exciting range for the NASDAQ. 50 points for the whole week is uneventful. All right, so having said that, hopefully this next week picks up a little bit. We'd like to get something a little more exciting going, and I do put that down as one of the slowest weeks in a while. Data coming out, nothing on Monday. We do have a full week here. Nothing on Monday. Tuesday, we've got productivity revised and unit labor costs an hour before the bell, consumer credit at 3 p.m. None of that's important. Wednesday, MBA mortgage index, JOLTS job openings, crude oil inventories. None of that's important. That's the weekly crude number. Thursday, initial and continuing claims. That's the weekly number. Wholesale inventories, and then the weekly natty gas number. Most of that's not important. Friday, Michigan sentiment preliminary. Treasury budget in the afternoon. It's a very light week for data. None of it's any of our big three or big numbers we really care about. There's no Fed meeting. We're not in earnings season. The week after is already going to be options expiration because that'll be the third Friday in June. So just be aware of that and all the implications that come with that. But in terms of data for this week, that doesn't appear to be what's going to drive the market. So let's hope it's something else. Charts as usual brought to you by eSignal 12. If you've not yet taken the trial of our services, feel free to do so. We will help you out for a couple weeks. Have a great weekend and a great trading week.